My name is Daphne Kallier-Starr. I'm 8 years old and live in New York City. I've been a shareholder for 2 years, and this is my second annual shareholders meeting. Berkshire Hathaway's best investments on which the company built its reputation have been in very capital-efficient businesses, such as Coke, See's Candy, American Express, and Geico. But recently, Berkshire has made really big investments in a few businesses that require huge capital investments to maintain and that offer only a regulated low rate of return, such as Burlington Northern Railroad. My question to you, Mr. Buffett, is could you please explain why Berkshire's largest recent investments have been departed from your old capital-efficient philosophy? And why specifically have you invested Burlington Northern instead of buying a capital-efficient company like American Express?
You're killing me, Daphne. Yeah.
I'm certainly glad she's not 9 years old.
Yeah, I'm just sitting here thinking which of the 6 panelists we're going to bump next year and put you in. Well, I thought I was doing well when I bought that city service at 11. The answer is that we always prefer the businesses that earned terrific returns on capital, like a See's Candy when we bought it, or a good many of the businesses, and American Express, earns a terrific return on equity and has for a very long time. The fact that we buy BNSF, Burlington Northern, means that essentially we can't get more money deployed in capital-light businesses at prices that make sense to us. And so we have gone into more capital-intensive businesses that are good businesses, but wouldn't it be wonderful if we could run the railroad without trains and track and tunnels and bridges and a few things? We get a decent return on the capital-intensive businesses. We bought most of them at very decent prices, and they've been run very well since we bought them. We still love a business that takes very little capital and earns high returns and continues to grow and requires very little incremental capital. We can't deploy as much money as we have in doing that, and so is the second best choice still a good choice? The answer is yes. It's not as good as the best choice. Charlie?
Well, yes, I like the aspiration of that young lady. She basically wants a royalty on the other fellow's sales. And of course, that's a very good model. And if everybody could do that, why, nobody would do anything else. The reason we're satisfied with our utility returns and our railroad returns is they're quite satisfactory. Quite satisfactory. I wish we had 2 more just like them. Don't you, Warren?
Yeah, definitely.
So the answer is they're good enough, and you're asking us to get perfection. If you want us to have all our money in Coke at, say, 5% of what it's now selling for.
Yeah, and a business like Apple really doesn't take much capital, but so you've got to spend a lot of money to buy businesses like that. Very few are for sale, and the answer is we have not foregone any opportunity to buy businesses that earn high returns, very high returns on equity capital, or when we could buy them at a sensible price, to buy these other businesses. So they haven't shoved anything else off the table. But you definitely have a job in our capital allocation department.